Ladies and gentlemen, welcome back to the channel. This is not going to be a pleasant video for a lot of people, and somebody has to be the bearer of bad news here, and it doesn't look so pretty. What happened today here in After Hours with Netflix earnings? We got to look at what happened last time Netflix fell over 20% in January. Take a look at this, ladies and gentlemen. Netflix is currently down 22.5% in After Hours. Woo, not so pretty out there, ladies and gentlemen. This is not so good for the markets. The markets are down about 0.36% here in After Hours. AMC is down 1.87% in After Hours. So this is not going to be a good reaction, even though we just seen a very good day for AMC stock. We broke above the 50-day moving average. We actually did close above the 50-day moving average. This move in After Hours is pushing us under. And given the scope and scale of this move, Netflix guidance for 2 million less subscribers next quarter, given that, I got to flip-flop again. It's not looking so good for at least a short-term rally. This is what we need to see for the MOAS. So there's two different sides of the coin here. If you wanted a short-term rally, looks like it's not going to happen. If you want the MOAS, then we're getting closer to that. So we got a lot to talk about. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comments section if you guys want to come join the trading community and trade some of these stocks. I mean, we have the Netflix puts, and those things are definitely going to print, but we're probably going to lose more money in the overall portfolio because it's not going to be very pretty. But let's get into this situation. So exactly what happened with Netflix. They were expected to gain about 2.5 million subscribers this quarter. They lost 200,000. So much worse than expected. Much worse. But what they guide for next quarter? To lose 2 million more subscribers. And the only area where they actually gained subscribers was South America. And that's obviously not a good thing. It kind of looks like Netflix is dying at this point. One of the only companies ever as a large tech stock, large mega cap tech stock, that has dropped 20% back to back. This simply does not happen all too much, but it's going to leave, like I said in last video, a bad taste in investors' mouths, and they're not going to like what they are seeing. That's why the markets are selling down here in After Hours, down about 0.41% currently. That's why AMC is selling down. That's why everything you look at is currently selling down. Now, what happened last time Netflix reported terrible earnings like this? Well, it was on what day is this? January 20th. What happened to the broad markets January 20th? Not so pretty, as you guys could probably imagine. The markets were down about 1.11% that day and continue to fall 2% the next day. And then that's where we had that weird like 4 or 5% down day right here, and then recovered to actually go positive by the end of the day. So the last time Netflix butchered earnings this bad, the markets fell about 4% after. And if you consider that one day move, you're down about 9%. 9% at the peak, recovered shortly after that, and then continued to fall, as you guys do know. And like I've said many times, the only thing that really matters in the markets is the Fed, right? They control the lending rates, how expensive it's going to be to continue to grow your business. That's important. But the most important thing is fundamentals. And when you see a stock or a tech company, it's FANG, right? One of the most invested stocks in the whole entire stock market, goes down over 20% back to back. Apple, Google, Amazon, Tesla, you got to watch out, because that could likely happen to some of those other stocks. Now, like we just talked about, the markets did fall dramatically last time. So what do I expect this time around? Well, nothing less than what we've seen last time around. So you're probably going to come back and retest these lows here in the next coming weeks. But you do have Fed Jerome Powell that speaks later on this week, and that's probably going to be one of the most important things, at least until we get into next week, which you're going to have Apple, Amazon, Google, all those other large tech stocks as well that do report. But this is just not a good thing. Fed Jerome Powell is on Thursday at 11 in the morning. And depending on what he says, that is definitely going to move the markets in a very dramatic way. We have went over this many times here on this channel, so really hammer it into your guys' minds that earnings and the Fed, specifically Fed Jerome Powell on Thursday, going to be the only things the market cares about. Unless there is a chemical weapons attack or a nuclear attack in Ukraine, anything else is really chump change comparatively to these data points. And I mean, I'm just flabbergasted. I'm lost. Like, I hardly know what to say because you don't see this all the time. This is historical in many different regards. Like, Netflix is literally dying. The company might be dying right in front of us. That's crazy. That's crazy. It's down 25%. Last earnings, I believe it fell 21%. So it's worse this time around than even last earnings. And you're living through history. You're living through volatility. Lots of money to be made out there. But you guys got to be careful at the same time because, boy, oh boy, shit is not as you think it is. You think Netflix is doing fine, Wall Street does, and it just doesn't happen. I can only imagine what's going to happen for Apple. Something like Apple controls 7% of the S&P 500. It's not going to be pretty once those companies do report. If you guys want access to all of my trades in real time, link down below in the pinned comment. That's the Discord that you guys are hearing right now. Everybody's kind of freaking out about that one. Pretty interesting. And we had a pretty strong day for AMC stock throughout the day. It was looking good. It was. Even made a video about it. Closed above that 50-day moving average, and then we got dumped on here in after hours. Well, for the day, the positive order value of option activity was 42%. The 24 orders totaling $4.47 million. Yesterday, you did see a lot of option activity. That's partly why we did see this move up today. And yeah, that's not going to hold any weight coming tomorrow. So very disappointing in that regard. I actually did buy options myself. I didn't think Netflix would butcher earnings like this. It's kind of funny. Oh man, it's a little ridiculous at this point. But short interest of free float for AMC is sitting at 19.47%. Current shares that are sold short of 100.37 million. Cost to borrow max of 2.34%. Utilization of 100% and days cover sitting at 2.37. So all in all, we are still very primed for a short squeeze. And like I just said in the beginning of this video, for a short-term rally, that's dead. Not going to happen. Unless there is a catalyst specifically for AMC stock, you're not going to get a short-term rally. Now, if for whatever reason we do get a catalyst, then forget what I just said. You can still rally. And the short interest does suggest that we are primed to see that rally. The option activity over the past 2 days definitely does suggest that we could see some kind of catalyst being announced. A lot of unusual option activity has been taking place. Nonetheless, the max pain for AMC stock for this Friday is $18.50 per share, roughly where we are at right now. I think we're a little bit under that with this move that we are seeing here in after hours. And some important things to know, the bond rates are continuing like a momentum stock. So this is not going to be good for the markets. And a lot of people have been wondering, like, why have the bond yields continuously been going up and the stock market is not reacting? What is happening? Why is this the case? And usually when bond rates make these kind of moves this fast, then you'll usually see that reflective in the stock market as well. They can lag behind each other, but usually they will always start to correlate again. And I think that is what we are going to see. And if that's the case, then the markets are definitely heading back down to those really low levels. So not so good. Not so good, guys. Stock tracker data is sitting at about 18,500 calls that are in the money, 125,000 calls that are out of the money, so nothing too crazy there. Pretty much the same thing as we have already reported on. And as far as AMC on a technical picture, let's give it a gander. In case there is a catalyst that does come out, you guys can see we closed at $18.68 per share. 50-day moving average was at $18.58 per share, down 27 cents here in after hours, so about 17 cents under the 50-day moving average. It's not all too bad in that regard, but we were not able to get that close, especially including after hours, because of good old Netflix. If we do see a market crash like scenario, then you're probably heading back down to $15 per share. Just to be up forward, transparent with you guys, I don't care what you do with your position. This is good for the overall trend of the MOAS. It reduces the liquidity that hedge funds have to cover on their short positions. Like Netflix was one of the most invested stocks by hedge funds and institutional investors, and they just lost 25% in a day. So, when you look at it in that regard, potentially a lot less money that could be available to cover on some of those short positions. We'll see what happens with Netflix. Maybe they could say something that turns this around a little bit, but it's not coming back. It's done for Netflix, and looks like the company's dying, in my personal opinion. So, nonetheless, that is basically it. Coming back to AMC yet again, the MACD incredibly bearish, started to curl up throughout the day because we were up almost 7% at one point. But that's probably not going to happen. The RSI is at 47.38. Very neutral, I would say. Right now we're under 50, so technically you're still a little bit on the oversold side, but we'll see what does happen. Things could turn around. I don't want to be the guy that says that it's impossible for things to turn around, but unless Netflix gets their act together here by the end of close today and tomorrow morning, the stock market is definitely going to come down in a very dramatic way. It does affect the overall markets. Netflix does, in a very dramatic way, like you guys are already seeing here in this video. The stock market proceeded to fall about 9% at the low after Netflix earnings. Did recover a little bit, bounce back up, and then we did hit those lower lows. So that's kind of what I would expect to play out yet again. Leave your thoughts, comments, questions, or concerns down below in the comment section. Would love to hear from you guys. We got a lot to talk about later on tonight on the live stream. Come join us 10 p.m. to 11 p.m. Eastern Standard Time. Thank you guys for watching, and I will see you in the next one.